Good morning, ladies and gentlemen, and welcome to the show. Listen, glad to have you guys here on this 22nd, Tuesday the 22nd of September, 2020. You know what is setting up for a worst case scenario in the United States of America? We got an election coming up right away. And the thing about this is it's going to be an election like we've never had an election before in the United States ever. The way they're going to have to do the voting and stuff during this pandemic. And I mean, it's just straight ahead, but it's setting up to a worst case scenario because there's something called a smooth transition of power. You know? And in the United States right now, this election cycle, it might take a long time for them to actually figure out who won. It might take months. And you say, well, that's not a problem. Yes, it's a monstrous problem. And the reason why it's a monstrous problem is if you remember in the last election when Trump got elected, there was a big controversy after whether they did recounts and stuff like that. They recounted the votes and everything, you know. And the thing is it wasn't a landslide victory. And in this case, I think that it's probably going to be something similar. It's not going to be a landslide victory. The country is completely divided. We've got about 50% of the population against the other 50% of the population, more or less. I mean, okay, it might be 48, 52 or something like that, you know? But it's close to 50%. It's close enough to 50% to create a huge tidal wave of possible social unrest. And this could extend out for a period of time. And then we got this virus coming into its second wave at the same time. And the whole thing is setting up kind of for like a perfect storm of big problems. Big problems. And big problems could escalate into even bigger problems. Then we got the financial system problems. It just keeps coming this year. It's like you get one wave comes through of problems of one sort or another, and then something else starts to happen. You know what I mean? And, I mean, this has been the most horrible year I can ever remember. But anyway, let's get the charts started right here and take a look at what's going on today. We're looking at the silver price. Took an awful big smash down yesterday. You know, and it hasn't recovered. It's still in that same low spot. Now, you know, silver inventories around the world, it's going to be being snatched off of shelves right now. The real physical silver is just going to be going out the door. You know, and this isn't going to be stopped. And how much do they have left, really? How much do they have left available for sale? That's what I want to know. Because I know it's going fast, you know, and I don't know the exact number of how much they got left in inventories. Can they suffer through this without going into a shortage? That's a big question, you know, in my mind right now. But here it goes. It's going out the door because its price has dropped down. It's like it's on sale right now, you know, and on sale, you have to understand the fundamentals behind gold and silver. Gold and silver have been all the way back into history, and they continue to be the rock-solid foundation of the world's financial system. And at a certain point, when investors get scared, they run into gold and silver. Well, you know what? Right now, we're in this little period where the market is waiting for this new stimulus package, and the market is very tentative right now. You know, that's where we see that drop, and its tendency is to drop today. Any little bit of news that the Fed is going to be weak under support. And like there's a little bit of news came out through the algos that was misinterpreted, that the Fed might raise interest rates when they near 2% inflation rate. Well, that news had a negative effect upon the markets because the markets are very tentative right now. They're looking for direction. They're looking for, what's the Fed going to do? Are they going to continue to support us? Are they going to keep coming with more money? Or is this whole thing going to tip downwards? And if they see that it's going to tip downwards, they're going to front run that. It's just that simple. Anyway, so the market's very, very tenuous. It's on tenterhooks right now. The market, as to just exactly which way it could turn, and it could turn down really big time and really quickly right now. The volatility is really quite high in the market right now. Anyway, okay, so we're looking at 24.32 for silver. And, we're looking at gold today. We're looking at 1901 for gold. It's down $10.50. Where silver goes, gold goes. Gold goes. And where gold goes, silver goes. They follow each other. And you know what? Cryptocurrency right here is starting to do exactly the same thing. It's starting to follow the price of gold and silver. So we're seeing the cryptocurrency price get knocked down. But you know what? It didn't get knocked down quite as bad as gold and silver in this latest smash. We're looking at 331 billion, 331.4 billion, with a Bitcoin dominance 58.4%. Now, I'm watching that Bitcoin dominance starting to rise again. And that's a bearish signal for crypto. Okay? That's bearish. That means that what they're doing is a lot of them are exchanging their altcoins right now. And they're buying into Bitcoin as a safe haven. And that's what they do. Just like investors, out there. When investors start to get nervous of the markets, well, they start heading into the dollar or treasuries or gold and silver when they're nervous, And when cryptocurrency investors get nervous, they dump their altcoins and buy Bitcoin. They find Bitcoin as their safe haven, And so what we see is when they get nervous, we see the Bitcoin dominance rising. Because that means more Bitcoin is being held than the altcoins. And so that's what we see. It was in the 57s. Now it's 58.4%. So we're looking at a Bitcoin price today of $10,462. And it's holding above 10,000. That's good, Let's take a look at the Dow Jones Industrial Average today, and it's down 34 points. But I'm going to tell you, anything could spark this off, right now at this point. And I'm not talking about a rally either, I'm talking about a drop. Anything could spark it off. Any little bit of news right now could spark it off. News like maybe they're not going to come out with a vaccine at a certain date or whatever. Any little news like that. Boom, down she goes. That's the way we are right now, until that next stimulus package comes along, and especially if it's a fat one, say it's 2.2 trillion, and it comes along, a next stimulus package, boom, right? You'll see the markets explode upwards on that. And they'll continue to explode upwards for months. You'll see gold and silver explode upwards on that. Everything will start to go back up again, and if we get that because that'll reinflate Wall Street. They're not going to give it to Main Street. They're going to let us just continue to deflate. They don't care about Main Street anymore. They don't care what happens on Main Street. Every business in Main Street could be closed. The people could all be pitched in tents with a big sign in front of it that says Trump Town. And they don't care. They really don't care. They did the same thing. Back in the Great Depression, they had a big city that was called Hooverville, after President Hoover. He was a Republican president, and they went into the Great Depression, and the people suffered on Main Street. And we're seeing the same thing right now. The people on Main Street are suffering. Main Street's swirling around the toilet bowl, ready to go down the drain, and they don't care. As long as they keep Wall Street up. As long as they keep inflating Wall Street. And this is the worst of all worlds for Main Street, because Main Street's going to start to see higher prices when they got no money, because Wall Street's being inflated. And all the money's pooling to just to one area, and it's not going anywhere else. And the banks, they see this deflation on Main Street, and they're cutting credit to everyone. Sorry, you ain't getting a loan. Well, how's that going to stimulate the economy? Interest rates are down and everything, but they're not going to they're going to be really hard on what money they let out. Oh my goodness, it's just a horrible scenario for anybody living through this right now. And I mean, I've never seen anything so tough. These are tough times, guys. I'm going to tell you guys what. You're living right through it right now. And 10 years from now, they're going to be talking about this. They're going to write about it in history books. Maybe not history books, because now it's all online. The kids will be reading about it online. 20 years from now, they'll be reading about what's happening right now online. 30 years from now. In fact, that all this stuff is going to come to light, and they're going to look back at this period in history as a very dark period in history where everything was unjust. Let's take a look now at bonds and rates. What we're seeing with bonds and rates today, we are seeing the U.S. 30-year drop, and we're seeing the U.S. 10-year unchanged. But it's the U.S. 10-year is 0.669, and the U.S. 30-year is at 0.142 today on U.S. Treasuries and bonds. So we're looking at the long end dropping, but it's insignificant. It's not big. It's only part of 1 basis point. The dollar has went up above 94. So we're seeing a dollar rally starting now. And this does not surprise me whatsoever to see a dollar rally right now at this stage in the game, and what they're missing is, and it's big, during the Great Depression, they were limited to how many dollars they could print. Now they're unlimited to how many dollars they can print. And that's a huge change, and that's the big thing they're missing in hoarding dollars is, you got the Fed over here, and they can create as many dollars as there are leaves on the trees in front of your house. Leaves on the trees in the world. They can pump out $1 trillion and then pump out another trillion the next day, they can start pumping out $10 trillion a day. And you're going to hoard these suckers? Now, real physical gold and silver, can they do that? No, they got work involved. They got to dig it out of the ground. It takes time. In fact, they're going into short supply. And it's so undervalued, And so, don't listen to these deflationists, because I'm going to tell you why. These deflation guys that are preaching deflation, those guys out there are only thinking short term. Because in the long term, they're not going to let everything completely collapse, because that's what would happen if they stop pumping the money out. Of course they're going to keep pumping the money out in ever greater amounts. It's just that there's these little lag periods where they don't pump the money out, and the reason why is they're being stingy. They're waiting until they have to pump the money out. And something comes along, like if the markets collapse or something comes along, then they pump the money out. They're not proactive. They're only in there after the fact. That's when they react. Right? And that's what we're headed toward. We're headed toward a crisis, and they're going to react. And then we'll see everything go back up again, and we'll see the dollar start to go back down again. It's this little game is going on, but it's a very dangerous game, because Main Street is coming into this election cycle, and it's going to be undetermined results. Like, the results are going to be up in the air, and then we got both factions on either side that are completely polarized. Completely and utterly polarized. And this is a perfect formula for civil unrest. And once civil unrest gets underway and gets to a certain point, it can just tear a country apart. And it can all happen so fast, guys. So, you guys stay tuned. We're going to try to stay on top of everything that's happening here. And we'll catch you guys in the next show. And you guys have a great rest of the day. Bye-bye.